Welcome back from break, everybody. We truly have a great panel here. And just to prove it, I think we may have the largest panel of the day, too. So we'll all commit to speaking 10 or 15% faster to be able to squeeze in just as much content. My name is Tim Flacke. I have the privilege of leading an organization called Commonwealth. We are a national nonprofit with a mission to build financial security and opportunity for working people living on low and moderate incomes through innovation and partnerships. We'll get right to it. As you can see from the title, we're continuing one of the themes of the day, which is the potential of agentic AI. But honestly, I think that what we're really going to talk about is people. We're going to talk about customers, users, consumers, people. And I want to just take a moment to explain why I think that's important and really belongs in today's big picture agenda, and in particular, this conversation about agentic AI. We heard earlier, Prem said, I love that, you can't outrun your talent. Did anybody else hear him say that? And I was thinking, I think you can't outrun your customers, right? That a lot of what we're talking about here today is ultimately dependent on end users, real people, deciding that what we are doing, what we are talking about, is useful to them, is delivering some value, is relevant. And so in that sense, you really can't outrun your customers. So when we think about agentic AI or AI more broadly, on very practical grounds, we need to be thinking about customers and users. And the second reason, and maybe I'm sort of preaching to the choir here, but it seems to me that this entire conversation about AI or agentic AI, at the core of it is a question of purpose. Like, why are we having this conversation? And you can see where I'm going with this. Like, ultimately, that should be a conversation about real people and how these technologies touch on real people. So I hope that provides some motivation to stick with us as we get into the conversation. And rather than read everybody's bio, I'm just going to ask you all to just introduce yourself when you first speak. And one of the things that is great about this group is every single one of you are involved in some kind of real-world work with AI. So let's get started by just tell us who you are and what is it that you have done by way of testing or getting your, metaphorically, your fingers dirty around AI that we can learn from. And let's start with you, Leigh.
Well, thanks, Tim. It's great to be here and to see so many wonderful colleagues. So I'm Leigh Phillips. I'm the CEO of SaverLife. We are a national nonprofit financial technology and advocacy organization, and our mission is to help improve the financial health of Americans with low to moderate incomes. So I want to start by saying a little bit about what was the problem that we're really trying to solve. And so we know that our financial lives are unique, right? So everyone in this room has a different financial set of circumstances, different life circumstances, you're at different stages, different behaviors. And for low to moderate income people, that of course is equally true, but their financial lives are also very complex. So SaverLife members on average make less than $50,000 a year. Most of them are women. They live across all 50 states. We have over 700,000 members now. And their lives are very complicated, right? That most of them have multiple sources of income. Some of that is from W-2s. A third of our members file a 1099. You're mixing together public benefits, private benefits. You're getting a chunk of your income one day of the year in the form of a tax refund. And oftentimes you have expenses that exceed your income. And so for our clients, managing their money is a very kind of high stakes and complex endeavor. But yet, up until quite recently, we were able to offer the same set of solutions to everybody. And so what we wanted to know was, well, what happens if we can lean into the complexity of people's actual financial lives and start building things that can help them in a more personalized, individualized way? So the first thing we did was a personalization pilot about a year ago for people who were self-employed. So that's a pretty big difference, right? Like either you have an employer or you're self-employed. That's a pretty key difference in your financial life. So we designed a version of SaverLife that was personalized for people who are self-employed. So different savings challenges, prizes, content, so on and so forth. And the results of this were really pretty astounding. So we saw more than a 200% increase in engagement. And most importantly, as an impact-driven organization, our rate of savings, so that's kind of our core metric, went from 60% of people saving monthly to 90%. And that held for 12 months, right, the last time we looked at the numbers. So now, fast forward, you know, like we're all at light speed now. So 6 months later, we have started testing our first conversational AI financial navigator. So now when people join SaverLife, they can engage with a tool that answers their financial questions. It can pull in their financial transactional data, everything we know about them, about their financial health. We've launched different tools to help people through that process. So far, we're seeing really great results. We're seeing increases in engagement, increases in retention. Too early yet to say what we'll see in terms of real financial health impact, which is, of course, what we care about primarily. But I'd say so far, we're off to a pretty good start.
Thanks, Leigh. And just say it again, how many months have you had Navigator in market?
We started testing it with 50 people in June, and now it's available to all new members as of, I don't know, a month ago. So it's going at a rapid clip. Yeah.
Why don't we just go on down? Nadim, will you introduce yourself? Tell us what you got your fingers in.
Yeah, thanks, Tim. Hi, everybody. Nadim Homsany. So glad to be here. And as Leigh said, so glad to see so many familiar faces here. I started EarnUp, a fintech, about 12 years ago or so, a mission-driven business focused on building a financial system that works for everybody. And in that journey, about 2020, 2019 or so, we started building an AI financial advisor. And with the release of the lab's various LLMs, it started to really grow some legs. And last year, Boeing Employees Credit Union approached EarnUp about acquiring those AI assets and the AI team that was at EarnUp. So about 8 months ago or so, Boeing Employees Credit Union, BECU, acquired that part of EarnUp's business, and I am now the head of AI at BECU. We're super excited about where we're going. Just quick information about Boeing Employees Credit Union. It is the largest community financial institution in the Pacific Northwest, has 1.5 million members, $30 billion of assets, and growing very quickly. So it's a members first, as you might imagine, with the credit union movement. It's a members first organization and very focused on the underserved LMI cohort of members. So it matches very well with EarnUp's prior mission of building a financial system that works for everybody. In terms of what we're spending time on in the AI world, you know, we have a belief that in the underserved and LMI segments that this is the group of customers in our minds that should have access to financial advice. But from a financial institution perspective, you can't because it's not economical to provide that financial advice. And with AI, it now becomes economically viable to do that. So our belief is that we should be providing financial advice to every single one of those members that needs it. And so the way we think about AI and the way we can provide that financial advice is both advice and then subsequently action. And the advice is something that you might imagine an LLM would be effective, pretty effective at providing, especially if you're pulling in the financial data from the rest of your financial life, whether it's at BECU or otherwise. But it's the value of being at a financial institution to do that. The value of being at a financial institution is that once you provide the advice, you've already got the regulatory and compliance and risk infrastructure in place to provide the product that connects you to that advice. So the classic use case in an LMI kind of category is like, how do I improve my credit score? Or I don't have a credit score, what do I do? It's like, well, here, let me take you through your financial life and explain what the benefit of having a higher credit score is, and I can get you into the perfect product to do that. Let me move you into a secure card, for example, just to start, or let me move you into a self-loan as an example of what we believe is going to be a very effective use case. So we're proud to have launched that product, which we're BECU. We've launched that product and named it BECU. And we're proud to have launched that about a month and a half ago or so to a pilot of about 150 users. It's closed at the moment, but it's making great progress, and we're super, super stoked about where it's going.
Nice. Feels like agentic AI, when you have it all under one house, one roof, is much more possible.
Yeah, and I'm happy to get into the agentic part of it because there's many, many agents that we're using to make this all work. Yeah.
Cool. Delicia?
Sure. Hi, everyone. I'm Delicia Reynolds-Hand, and I am Senior Director of Digital Marketplace at Consumer Reports. And there at Consumer Reports, what we do as an organization that also applies to the digital marketplace is we have a goal of ensuring that marketplaces, specifically digital marketplaces, so the online platforms where consumers shop, the tools and services that they use are safe, and fair generally. And so I went to Consumer Reports. I joined Consumer Reports almost 4 years ago and launched a digital finance testing initiative. So developed a framework and then worked with our team. And so when I first got there, I thought, well, there's such rich intelligence in terms of the different product testing that we have as an organization. And in the finance context, what if we were able to leverage that intelligence in real time and influence or impact consumer decision-making in financial services? So, and some of you were there when the concept developed, kind of thinking about a honey for money type concept. So we played around with some clunky browser interfaces, but our testing in the digital finance context wasn't mature enough. So then we pivoted as an organization to the area where we do have a deep well of testing in consumer products, so cars, appliances, and other kinds of services where we have deeper intelligence. And we created an AI-powered shopping assistant. It's called AskCR. It launched in beta probably about a year and a half ago, and then it's been out in the marketplace for about a year. And the idea is that it's closed loop, first and foremost, so we're not dredging the web, but as consumers go about and are looking for different products and wanting to know what to purchase, they're able to draw on the well of our testing expertise, our journalism, tips for safe use or more efficient use, et cetera, at the same time while they are executing their shopping. Additionally, one of the things that I love about CR is I get to raise questions and then work with super talented folks to help bring those to life. We started to think about or see where AI is being embedded in different ways. So models and tools, products that are now advertising super AI features. And so we're building a framework specifically to evaluate that and have developed a taxonomy of different consumer-facing impacts that AI will have, and then are about to go on a pathway. But we recognize that there's limitations that we have in being able to execute this as researchers, testers. So we'll also need to develop our own evaluator agent. So we're also doing some work to first build a taxonomy of evaluative measures, and then also develop that agent that can write alongside the consumer, ensuring that their choices, the platforms, and the products that are being optimized by AI is safe, fair, private, number of different measures.
And Viviane.
All right, so I'm Viviane Eide. I'm a UX lead at Google, and specifically I'm on the commerce team. And so I can tell you about some AI features that we are launching right on time for the holiday season. So of course, we all love finding the perfect gift, and we love it even more if we can find the perfect gift at the perfect price. But when we talk to users, they tell us, that is actually quite a bit of work. You have to get all these different ideas. You have multiple tabs open. You're searching the web, scroll, keeping track of prices and everything. And so users tell us, there are some of these tasks that we actually don't quite enjoy spending a lot of time on, and we would appreciate a little bit of AI help. So that's what we are launching right on time for the holidays. So now you can have a conversation with Google Search, kind of like you would with a friend. And you can just say, hey, I'm looking for some ideas. My sister, she's a very active person. She walks a lot. Any ideas here? And then Google will very creatively give you some suggestions, and it will also pull in reviews. It can give you price comparisons, product comparisons. And so let's just say it suggests, hey, why don't you get these sneakers for your sister? And let's say I think that's actually a very nice idea. But I also know if I buy them today, that's probably a mistake because Black Friday is coming up. So now as a user, I would have to keep in mind, okay, let's not buy these shoes today. Let me wait and see, keep track of prices and things. And so, of course, that puts a burden on the user. And so they tell us, you know, if AI could help here. And so we're launching this very cool feature, which is essentially a price tracking feature. So now you can say, okay, I want to buy these sneakers for my sister at this particular price. And so now Google is going to track prices for you and send you a notification when we can meet the price, when we found the deal for you. And then with certain merchants, you can actually even go through like an agentic checkout experience with GPay. And now the important learning we have here is that, you know, like AI and especially agentic AI is still very nascent. And so we like to actually meet our users where they are. And so what we know is that right now, people love it when AI can be their co-pilot and can augment them, but they still want to have a moment of review and control. So that's exactly what we deliver on. So even if the AI has found the right price for you, we're not going to do anything. We're just going to tell our user, okay, the price is there. Do you actually want to execute? So we keep the human in the loop so that people can actually build this trust with this new technology slowly over time. And we do think that shopping is actually a great way to, you know, take these little steps and build this trust over time.
Thank you. So you can see we have a really diverse panel. If I could just pick up something, Viviane, you said the technology is still nascent, and you know, as you'd expect, we had a pre-call to sort of talk about what we wanted to talk about today. And as I remember it, it was really in that moment where we probably all sensed that we're still in the early phases of something. Delicia, I remember you said very clearly, I just hope we get to what's really at stake in this conversation. And so I wanted to give you a chance, and others if you want to weigh in, you know, what was going on in your mind when you said, like, let's make sure we get to what's at stake in this conversation?
Yeah, sure. I mean, I think a couple of things came to mind. So one is, I feel like we're living, some of us had this conversation at lunch, a very similar moment in terms of there are all these things that are possible, right? We live this moment during Web 1, Web 2, and here we are again with respect to AI, all these things that are possible, but we're seeing already in the marketplace not AI use and development driving towards our highest ideals, what's best for consumers, what protects consumers. We're seeing a lot of driving towards optimizing for commercial uses, optimizing for shopping and for commerce. And so when I say what's at stake is that we could cement or set in stone development pathway that forgets about the consumer in the transaction, that frankly cements some pretty already harmful practices that we've talked about as a broader ecosystem for decades that we still haven't solved for. So what's at stake, I think we are at a design moment, design kind of fork in the road where, or maybe it's not a fork in the road, right? I'd like these to be parallel tracks where alongside optimizing for all these commercial uses, we should be optimizing for consumer protection. And not only just thinking about, you know, how to get more consumers to your product site, et cetera, but how do we protect them along the way, and what role does technology factor as a driver of that? I'm very concerned that we are going to do what we always do, which is we wait for the bubble to burst or the crisis, and then we react, and then we are even further behind. So for me, what's at stake is really the consumer. Do we cement in what we already know, where the system has failures and shortcomings, or do we use this design opportunity to really think about the needs of the consumer and optimize for both?
Let me thank you for that, and let me use it as to jump to this point. I think there's a case to be made that we should be especially thinking about low and moderate income consumers. And I think that may be related to your point. So I wanted to ask, Nadim, I'm going to ask you if you'd go first. Do you think we should give special attention to LMI consumers when we think about AI generally or agentic AI?
Yeah, and it dovetails well into the last, Delicia's response over here. Absolutely, these are the folks in our country who need the most help. Many of you are familiar with some of the statistics. Depending on when you measure, 50, 60, 70% of Americans are living paycheck to paycheck. The majority of Americans can't get through a $400 unexpected expense without going to a payday lender or friends and family to borrow money to get through that expense. And these are the people that need the help the most. I got a hot take here, and it's backed by research, so maybe it's not so hot, is that financial education doesn't work. There's been a lot of research out there that shows that it doesn't work. And there's one exception to that rule. If you provide the financial education at the moment the individual is making the decision, then individuals actually make really, really good decisions around their financial health. And so having an always on, always available financial advisor that is able to get your gestalt, your like holistic financial life in one place and provide that advice in the moment is a massive win for the people who need the help the most.
Can I jump in on that, Tim?
Of course.
I know you weren't going to ask me if I thought we should prioritize LMI people, because yes. So everything that Nadim said, I feel like we are just moving at such a fast pace, right? And I've worked in this field for a long time, and we can do things now that we couldn't do 6 months ago, and that's pretty remarkable. And one of the things I think I'm most excited about is the idea that we can now be proactive instead of reactive. So to kind of build on what Nadim was saying, right now you can go to SaverLife, you can ask questions. We have a debt diagnostic tool, which Sheena mentioned earlier today, that allow people to engage in different ways. But we can also be proactive, right? Because we know about their transactional lives, we know a little bit about them, whether they have kids, whether they have different forms of debt, like all of these things, we can combine them all together. And instead of waiting for someone to come and say, I'm struggling with debt, we can say, can we help you with your debt? We can identify people who have, let's say, an auto loan that's a high-cost auto loan and think about or ask them if they want to be connected to a credit union or another group that could refinance that loan for them. Just in the government shutdown, we were able to identify people that we believe had lost SNAP benefits and send them cash. So there's a lot of ways that we can proactively move to really help people before things become a crisis, right? So you can look at, we've set up a way of tracking, we call it our early warning system, income shocks and expense shocks within our platform, zero balance events within people's accounts. So then we can be proactive about helping people when we see these events occur. And I think that there's a ton of promise there for ways that we can help prevent crises, but also ways that we can identify opportunities. So next month we're rolling out a new test that we worked on with Columbia University that took all of our SaverLife data and came up with different savings profiles and kind of segmented our membership based on these different profiles, and they're going to offer them specific, we are going to offer them specific savings targets and goals, and their model says that they have a 85% confidence, according to Columbia, that people will increase their savings by $500 in the next 6 months. So I'm happy to come back, Melissa, this time next year and tell you if that was actually true or not. But I think that our ability to really anticipate what's happening in people's lives is going to be really, really exciting. And so just-in-time information, always-on information. If you got a question at midnight, if you got 100 questions, you don't know who else to talk to, this is a service that we can provide, but also in that proactive way of letting people know that help is available to them.
I think there's something there about that you said, Leigh, that I want to just pick up on of being able to spot and anticipate issues, right? That is one of the meta-level opportunities inherent in the technology. And I would just offer as well that I think you can make the case, Nadim, you cited the studies that show how many of us are living paycheck to paycheck. That's a thing we pay a lot of attention to. But an interesting fact is that you will consistently see figures as high as 70%. Well, just by the distribution of income, that means we're talking about people who are well above the median income. But I think we can argue that when you get lower down the income and the financial well-being scale, you are more likely to feel some of those tensions earlier. So if we're on the hunt for the ability to spot problems earlier, when we work with people who live on tighter margins, we are more likely to see that. I'm sure you see that in your data all of the time. And maybe just to grab the point a little bit, take the point a little bit further, in our work, we think a lot about basically how to make the financial system work better. And one of the words that I've noted has come up over and over again today is this concept of trust. I think most of us, it's just intuitive that if we don't have the trust of our customers or our users, or we would say if we don't earn that trust, like where do you go? Back to my opening comments, right? There's a book out there called The Speed of Trust, and the whole thesis is like you can't go any faster than the level of trust among the various stakeholders. So in that spirit, actually together with Capital One Insight Center, we've done a lot of work looking at how do you earn that trust among low and moderate income consumers. And it's interesting, once you break it down, at least what we found through we did some nationally representative research and then some field studies, there are kind of 5 things that came up. Our work was really looking at chatbots in depositories. And the number one thing people said, well, I need to trust the depository, the bank, the institution that is providing this AI. Incredibly high correlations between what people said about whether they trusted the institution and whether they trusted the technology, which is both intuitive but also important. We can think we got to get the design right of the tech, but if the wrong messenger is putting it in front of people, it won't work. But then they said, it's not just that. This thing has to be effective for me. Like if you want me to trust it, it has to be useful. Again, once you sort of see it in writing, like that makes sense. But when I think about my own experience as a consumer and how many times, frankly, technology has let me down, right? Of course I had been frustrated, but it was a moment to realize what that really has done is erode my trust that you understand me, that you see me, and that you can serve me. And then, of course, we heard people are concerned about their privacy and data. That's kind of what we would have expected. But I think it's really interesting. People said, I need to trust that this tool you're offering me is that I can trust myself, that I'm going to be more confident in my ability to make financial decisions after I've interacted with this technology, which is really interesting because back to the difference between folks with more income and less income, consistently people have less confidence in their own financial decisions when they have less money and less income. And they're basically saying, I want to come out of this experience better off. And then the last thing they said is, I want to trust that you are not going to judge me, which makes a lot of sense and is an area where technology obviously has a lot to offer. So I wanted to offer that as a little case study of how sometimes when we look at people who have less, it actually helps bring into relief things that are probably true for all of us, but might not be as present because we have more buffers. So thank you for indulging me and letting me share that. I want to get to the agentic question, and we had a little discussion in prep that we would try to be provocative. So the provocative question is agentic AI going to improve financial outcomes 5 years from now for consumers, or if you will, for less well-served consumers? And if you're willing, Viviane, I wanted to give you the chance to go first on this one.
You think I have the crystal ball, huh?
Well, I think you'll play along and take a position.
Well, I also don't know what the future entails, but what I can say, I actually always like to remember 2 things. So technology right now moves at lightning speed, but humans and their needs are actually quite stable over time. And the problems that technology solves for people are oftentimes also problems that have existed for a long time. And most likely, people actually already have a solution for these problems. And so what we like to do is we like to actually see, okay, there is a solution already, but there is most likely a little bit of friction. And how can then this new technology help with this friction and make life better for people? And quite frankly, what we hear from users, they don't really care what technology powers this solution. They just care about having a good solution to their problems. And so what I think the core of everything is whatever new technology we apply, we always need to cater to the core human needs and the core problems that we want to solve. And so what we hear, for example, when it comes to money, people care about is it secure? Like they obviously care about the security of their transaction, the security of their data. Then of course everybody loves saving. So everybody wants to feel very smart about how they spend money. And then also people care about simplicity. And so whenever there is friction, people usually don't like it. So what can we do to take the friction away? And then the second thing I like to remember is that we need to meet people where they are. And so right now, we know since this technology is very nascent, we need to gradually build trust first. And how are we going to do this? So kind of like, I like to think of like as if you hire almost like a new employee. They come with all the bells and whistles, they have a great resume, and you think they can deliver great things. But it's obviously helpful if they have a software engineering degree or if they studied law. So you want to be transparent about what this tool can actually do for you. Same as you are appreciating when a new employee kind of comes with a certain resume and background. So we want to be very transparent. And then at the same time, we also know that because it's very new, kind of like as if you have a new employee, you're not going to have them on day one run the company for you. You're obviously going to give them tasks. And then as they deliver very well on these tasks, you're going to trust them more with bigger tasks and delegate more and more. And so that's, I think, a nice way to think about AI, and especially agentic AI at this moment in time, where it's a good idea to really meet users where they are and really cater to the needs that they have today. And so right now, probably a good idea to see AI as this like co-pilot that can augment us and hopefully make our lives better, but we still want to be in the driver's seat.
Thank you for that. Delicia, do you want to weigh in? Agentic AI, what's it going to do for us in 5 years?
I mean, sure. I think it, you know, if it's fit for purpose, and then what are those purposes, right? So not to beat a dead horse or anything, but if the only thing we build are agents that just help people to consume and then put that into current economic models, then that's not going to be good for consumers. So, and friction, frankly, I think is sometimes good for consumers. So a good outcome, for example, or use case for an agent that's on all the time with the consumer's consent and all of that, could be, for example, you know, a single parent who has irregular income, has some auto pay, but the agent recognizes, for example, that the check hasn't deposited the same time it usually deposits every month, and maybe turns off the auto pay, right? That's friction that is beneficial to a consumer. And not necessarily driving towards a commercial. And I'm not sure how you monetize that. I think the main point, though, is that unless we have agents whose sole purpose and jobs that they are trained to do are ones that are protecting the consumer in these different transaction flows and things like that, I don't think we will see good outcomes for consumers.
Nadim, do you want to weigh in here?
Yes. So I'm a cautious technologist optimist, I would call myself. I started coding when I was 9 years old. And so, you know, if you go back to then, oh shoot, I'm about to reveal my age. If you go back 5 years, when I was 9 years old, no. If you go back several decades, life today, if you look at the most basic statistics, life today is better than it was 40 years ago, despite the popular narrative. Infant mortality rates are down. Mortality rates are down. You can just, you know, middle class relative to then and what they can afford is more affordable now. So for basic services, despite all the stuff I said around low and moderate income. So, I mean, think about what Max said earlier and his founding story about, you know, the asterisks in the upper left-hand corner of the credit card that he was applying for, and how an agent can help you determine whether that is a good deal for you or not, or whether it's going to be good or bad. I just keep coming back to the story that people who need the financial advice the most can't afford it. The system is not set up for them. There's that crass, you know, quip about it's expensive to be poor. It's true. And if you are able to give the financial advice in the moment at the right time, it's, I feel like agentic finance and AI is just going to make it's going to help us just continue to ride the curve up and to the right.
So can I give a yes and yes but kind of answer to this?
Absolutely.
If we move towards impact with intentionality, I think we can see some gains in the next 5 years. You know, in the nonprofit world, that's what we do, right? Like, I'm very clear on what I want our product at SaverLife to do, which is to help people increase their liquidity and save money, to decrease their debt, increase their financial confidence, and have more wealth. And so those are always the things that we are held accountable to and that we're working towards. And so that gives us a way to assess, right? Like, is this working? Is this helping? And is this or not? And I think we also are in the powerful, in some ways, position that we don't have to monetize our customers, right? Because we're a not-for-profit and we're supported by many great foundations, including, you know, JP Morgan and Capital One, who invested in us to do this work. So that means that we are free to really focus on those impacts for consumers without having to really think about, you know, what's the tail and what's the dog. And I think that's really important. At the same time, one of the things that you and I, Tim, had talked about is I do want to caution against magical thinking, right? The number of times where, you know, excited people call me and say, oh, if you had a magic wand or the silver bullet, I'm like, I don't have a magic wand, and nor do you, right? So, sorry. And what I mean by that is there's no app to end poverty, right? Like, that comes from policy change and systems change and really thinking through how can we make life better for working families in the US, right? So you can have the best agentic AI in the world, but if you don't have childcare and paid parental leave and health insurance, it's not really going to help you as much as we could in other ways. So I don't want us to get too into, like, there's this magical new thing and it's going to, like, solve all of the problems. Now, you can tell I'm pretty excited about what it can do. I think it's going to give us a real fighting chance to do some really, really tremendous things. And I'm excited about it as someone who's been, you know, leading this field for a long time and been frustrated about the things we haven't been able to do. But at the same time, we also need to really do the meaningful and difficult work of creating better systems that work for more people.
And knowing the difference between what can and can't be impacted through technology may be part of the, yeah. Let's push on agentic a little further. Probably the most fully realized form of an agentic AI would be some kind of fully autonomous financial agent. So the question for the group is, you know, is there a world where we don't manage our money, where that is handed over? And would that be a good thing? Who would like to start? Nadim, I'm going to look at you.
Yeah, that's fine. I said that's where we're going. I do think there is a world where that happens. I think a couple things need to happen. One, time. It's going to take us some time to get there. I think, two, the Overton window has to shift. That is what people are willing to accept as standard and normal in their lives also has to shift today. As a couple folks were saying, it's like people feel that there needs to be a human in the loop. They need to have the last decision, or they need to be able to review the thing that the machine is suggesting. So I think absolutely we'll get there. I think there are stages that will happen. You know, a lot of people are worried about these AI models making mistakes, and it's a good worry. The willingness to accept the accuracy and the precision of your Netflix recommendations versus the accuracy and precision of what a financial advisor, AI financial advisor, is telling you is different. But I'd remind everybody that, you know, if in a financial institution, there are call centers, there are financial advisors that are available in person, and they make mistakes too, right? And so it's we have to think about, like, if we treat these machines as humans and think about, yes, they are going to make mistakes, then how do we wrap them around the infrastructure so that we can monitor those mistakes and correct them if they're made? So there will be I think we'll get there. I think it's time. You know, I think it's beyond 5 years that it's fully automated, and I think there are slow steps that we'll take as a society that will get us more and more comfortable with those decisions.
Well, the people that don't manage their money today are rich people, right? Because they have people that do that for them. But the vast majority of Americans have absolutely nothing that can support them in making these decisions. And, you know, people increasingly getting their financial information from TikTok. So, and I wish I was joking, but and so to Nadim's point, right? Like, what are we comparing to? That's not to say that we shouldn't be building these things as robustly as we can.
Viviane, or yeah, Delicia.
I'd say, you know, autonomy is probably the wrong goal. I don't think we're anywhere near ready for that, just given the mistakes that we know can happen. You know, the models, systems, tools make mistakes, then human lost in translation issues. With all of the things that could go wrong, I hope the last thing that we're thinking about is autonomy. What about true agency, right? Personalization that is not extractive, but really kind of optimizes and augments the person's power to, you know, the point about rich people, wealthy people, yes, other people are managing their money in the background and they're not really thinking about it. I think that's a good goal, potentially, if we have surety that everything's working and there's a backdrop or fail-safe, something can intervene when things go wrong. But for right now, autonomy is kind of scary.
Not the word you would choose.
Yeah.
Viviane, do you want to weigh in on this one?
I would say, personally, I think it depends on if we deliver on the small tasks first.
That makes sense, yeah. All right, we're getting to the end here, so I'm going to combine our last two questions, guys. We had a question about, you know, is there anything that our esteemed panelists, each of you are carrying that you're afraid of that you want to name in this conversation? So you're welcome to do that, but the real key question is, you know, we have an audience here of people who are shaping this world, and so what is the one piece of advice or wisdom or observation that you really want to make sure this group hears? Either to go back to where we started about people, users, you know, the end beneficiaries ultimately of this work, or the end arbiters of whether it is beneficial, or specifically about agentic AI. So Leigh, why don't you get us started?
Well, I'll answer the second question.
Perfect.
Because, yeah, there's nothing to be afraid of, right? We're not all going to, I don't know, be eaten by robots or whatever. Well, robots don't eat, but you know what I mean. Yeah. So, you know, so I think the advice I would have for us, we do everything in partnership with the members of SaverLife, right? Like that's the people that are our, you know, customers essentially. And the thing we promise is an improvement in their financial life and their financial health. So I would say really being clear about what it is that you're trying to achieve, right? I said for us, it's pretty clear. We want to see gains across these metrics, but I bet there's a lot of other, you know, companies and places that are not so clear about what does success look like. And this question of what are you optimizing for, I think is really, really interesting. And I thought when the professor from Berkeley was talking about that, I was like, yeah, that's a really great, that's the question, right? Like, what does success look like, and what are you trying to achieve? And we're doing a lot of continuous testing. We're starting very slowly. We're being quite conservative. Our AI does not roam around the internet. It's limited to the things that it is allowed to talk about, and the things it's allowed to refer to, et cetera, et cetera. So we're doing some constant monitoring to make sure it has, you know, a high quality experience. And we're also really interested in what we can learn from people about what they need and want from this process. So we're getting a great deal of really interesting data as well. So listening to customers, but knowing what problem you're solving would be my advice.
This is a good question. I know I'm not the first person to make this comparison, but if you think about 1995 or, you know, in the mid 90s or so, when the internet started to become more apparent to folks, this is kind of our 1995 moment. Can you imagine life today without the internet? And so I would say with AI, to the extent that, and maybe you're not surprised that the AI guy up here is saying this, right, is to the extent that you haven't fully embraced AI, in my mind, the models are the worst they're ever going to be today. And they're only getting better. And so I think we are having an internet-like, or even much greater, if you look at the data, transformational moment. And so to the extent that folks are thinking about whether they want to spend time on this technology, you know, my unsolicited advice would be yes.
I think my advice would be spend as much time in optimizing for things that will make you money as you do for the things that may not, right? Because those things are going to translate into trust. And once you lose consumer trust, you know, that's a customer. And I think particularly for regulators in the room to start to think about these previously thought of soft metrics as consumer trust, loyalty, and things like that. Instead of thinking them as soft variables, you know, what would those look like as new areas of oversight, especially once you start to think about an agentic world? Issues like loyalty, trust, care are now much more important, and we're going to need regulators who know how to build the agents that provide that level of oversight, or at least paying attention to these metrics to be able to successfully regulate this marketplace. But I would say don't just build for one side of the equation, build for the other. We need protective agents as well.
Can I just jump in here for 1 second, just to add something? I think Delicia nailed it, right? The trust part of offering financial advice via these artificial intelligence tools is so critical, and I think it really does benefit people who need the help. So, you know, trust equals transparency divided by self-interest. The fact that you need to have such radical transparency nowadays in the financial system in order to gain that trust is just a benefit for the participants in the system.
Nice. Viviane, you get the
Yeah, you know, I'd say at Google we always like to say, start with the user and all else will follow. And so my guidance would be really listen to what's needed. And so from my perspective right now, a very good idea to be very transparent and explain what the technology can deliver on so that people have the right expectations. And then also at this moment in time, definitely keep the human in the loop.
And I would just add my 2 cents and say my variation on Viviane's formulation is, you know, start with the end in mind, right? We all have our individual pieces, and that's how work gets done, but we and people beyond this room are, in a sense, the shared custodians of this truly revolutionary technology. It's a tool. We have to be clear on what it is collectively we want, and at least speaking for our organization, but I think for a lot of us, we need a world with much wider prosperity, much less financial insecurity, much more confidence in the system that we are all a part of. And you know, I just would invite us all to think about whatever piece we're doing, how it can help contribute to building that future that we all have a real shared stake in. So thank you to the panelists. Thank you all for your time, and we'll move on.